Guys, it's days like this that people tend not to look at their portfolios. I mean, it's sometime after, it's about 1:30 now, and this S&P is down 2.78%. The Nasdaq is down almost 4%, 3.84%. And this is brutal, guys. This is brutal. I don't really look at the Dow, but I suspect that it is down tremendously too. And then the worst thing is that Tesla, that stock is like, oh my god, it's almost like free falling. I mean, Tesla is down almost 10% for the day. And I mean, this is coupled with a few days ago it was down 8%. Like, I feel it for the Tesla shareholders, right? Like I said, I did a short and I'm telling people, if you know a friend that owns a Tesla stock, please do not ask them how is the stock market doing. That's cruel. Because, if someone bought, say, Tesla, in January, they're down over 60% right now. I mean, these poor folks, I mean, I hope they didn't use their life savings to do this, but like, that's really harsh. And, when you look at it, then you have the folks in the crypto world, and that's a whole different thing. I don't like to even talk about crypto because one of the things is I don't even understand it. At least you can see earnings with like a company like Tesla or Citibank or whatever. With crypto, I don't want to even chat about that. Those folks, they took their gamble with it. If they make money, they make money. If they don't, they don't. But one of the bigger things that I wanted to look at was what's causing this. And one of the big things that I was reading about a few days ago was, a JP Morgan analyst said a lot of pension funds, even international ones, are kind of rebalancing their portfolio, and they're getting rid of some of the equity and swap it with debt. And this is because there's higher interest rates and it's more attractive, right? I mean, interest rates are now north of 3% for the 10-year, the yields are north of 3% for the 10-year bond. So this is a natural thing that you would expect folks to do. And to me, and as I tell you guys, this is an unqualified financial opinion. I do not advise people. This is just for entertainment purposes. So please do not listen to me to make any investment decision. Go and seek a qualified professional for that. But for me, my unqualified, uninformed opinion, right now I think there may be a flight to quality. What do I mean by that? I think a lot of folks who had their money in these type of high growth, or the promise of high growth companies, are now moving over to more stable stocks that actually provide dividends. And as you go into a recession, I did a video on this already, people tend to be very, I would say, cautious about making big ticket purchases and durables and things that last over 3 years. So people tend to be very cautious. Like for me, like if I have a car and it's 7 years old, would I be changing it right now? Like, do we all know what's going to happen with the economy and jobs and all of that stuff? So people tend to, hold back a little. And we're seeing news that shows that, and let's look a little bit on Tesla, that Tesla is offering discounts on some of their cars, and that's not a good sign for a company that you have set up, the mindset and the paradigm as a growth company. And so, sometimes these drops are real. They're not just fluff. They are real in terms of, sometimes it is that people are saying, hey, do I believe into the growth story? And if some people don't, they'll leave it and they'll go to something that they feel is more stable. And then also, staples, things that people buy regardless of the recession. That's an interesting group to look at, like the Coca-Colas and the Wrigley's and all of that stuff. What is it that happens with those versus the others? That'll be interesting. And one of the things that I'm going to do more of is look more at the market, because you know what? Sometimes the market provides opportunities, and sometimes it's good to just keep an eye on it. Like for me, I'm enthused by it because I've been looking at the market very closely since 2016, and one of the things that I've seen the rise and fall of several stocks. Like look at Baba. Baba was once a darling of the stock market, and look at it today. And then Meta, those are companies that are very interesting. Look at what happened with Netflix this year. It went down, and since June or July, it's up almost 60%. So there's several different things that can happen, and it's interesting. I'm not that interested in looking at the ups and downs and all that stuff. I'm more interested in looking at the more fundamentals of companies, because to me, I tend to agree with Buffett that, this real cost, the real price of a stock is just the sum of the future payments, or the net present value of future payments you plan to get from it. And that's the route that I take, and I look at it, and that's why I like some stocks. But I won't talk about the ones that I necessarily like, because I'm not trying to influence anyone to buy anything. This is just, as I said, for entertainment purposes. I'm more interested in the overall market, and to look at some of these growth items, because sometimes you have to look at if the I want to call it high expectations on them, will they really materialize? Because we saw it with Tattooed Chef. Like, I look back on some old videos back in January 2021 where people were literally telling you that Tattooed Chef was going to be a 10x stock, and today that stock is down I think it was 92%. I didn't even check today what it's down, but it shows that this type of alternate theory on stocks, these meme stocks, and this looking for the 10 bagger, I don't know if that's necessarily the best way to go about investing. As I said, don't listen to me. This is just for entertainment purposes only. But as you see them go by, it's interesting. It's very interesting to see how, remember years ago they spoke about the Dutch tulip market, bubble. Then this happened way before our time. And when you look at it, people were buying tulips, and the price of tulip went way high, and it became a point where people needed to step back a little. And I like that book, that little story, when I was a child, The Emperor Has No Clothes. And sometimes, when you're in groupthink and everyone is telling you that this makes sense and all of that stuff, sometimes it's good to just exercise a little critical thinking and step back and look and say, does this make sense? Because that's the beauty of it. We all make our own individual decisions, and that's the way I look at things. I can be swayed by others, but what's important for me is, like, in that quiet time, I sit down and figure out, did that make sense? Does this make sense? And that's the type of way that I think of it. And a day like today, one of the things I always say, because I've seen this happened back, I want to think that this happened back in 2018 in around Christmas time. I want to think that's it. I'll go check and make sure. But when this happened, what I do remember way back then, and I should cover what happened back in 2018 December. I should cover that, because that's a very important time. Lots of things went on sale. I'll never forget that. And I always kick myself when they went on sale. One of them was Apple. I remember seeing Apple, this is pre-split, at $121. I'll never forget that. Pre-split Apple. And this is, this was a time when I looked at it and I said, was this a good buy? Is it? And today you look at it, right? You look at what Apple is cost, and this, I think Apple split 3 for 1. So that 121 back then was about 40, equivalent today of about $40, $41. That's the time sometimes that you take a look. So I'll do a little bit more on this because this is something that near and dear to my heart, and I think that I have a channel here, and I just wanted to use this little tiny channel to just spout at the mouth on things probably I don't even know much about. But a qualifier, guys, don't follow my investment advice. This is just entertainment. Thanks, guys.